Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Nike is one of the most recognisable brands in the world. It's also one of the most interesting companies on Wall Street. Its share price has fallen 60% from its high in 2021, with a whole range of challenges from slowing sales and an increase in competition to a sales strategy that basically just didn't work. Today, I want to take a closer look at Nike, at the job ahead for the new CEO, and whether this iconic brand represents an opportunity for investors or not. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Josh Gilbert is a market analyst at social investment network eToro, and he's with me in the studio. Josh, welcome back to Fear and Greed.
Thanks very much, Sean. Good to be back.
You're an expert, Josh, on Nike. Give us the potted history in elevator pitch style.
Well, I don't claim to be an expert because I call it Nike, so people would probably tell me.
Which is it?
Well, I've been told it's Nike. I think it's after a Greek god, apparently.
Right.
But yeah, look, I mean, a really, really bad couple of years. Essentially, the root of the problem is that Nike shifted to this sort of direct-to-consumer strategy that essentially didn't work. So after COVID, I think they tried to move a little bit more online and just basically took shoes off of Foot Locker and basically took it out of their stores. Think wholesale relationships. What that allowed other brands to do is sort of come in and take that sort of shelf space, right? So some of those sort of up and coming competitors, Hoka, On Running, New Balance, these names sort of really came back to the fold and took over some of that shelf space and allowed them to gain some ground. At the same time, they've also faced challenges recently from heavy inventory perspective. So again, the sales have slowed, pretty heavily, which means they've got, high inventory. They've had to shift that inventory. That means they're having to discount items, which is affecting margins and therefore affecting earnings. And then at the same time, they're dealing with really, really, tough sales in China. Last quarter sales in China dropped by about 17%. Obviously, the economy there is struggling, pretty badly, and they're getting a lot of competition in the region, right? So there's other competitors sort of coming in. There's a company called Anta Sports in China, which is growing, pretty rapidly in the region as well. So basically, a strategy that didn't work. And then now competition really, really coming up fast.
Okay, so let's take a step way back. So Nike's late 60s, early 70s, Phil Knight famously paid like $35 for the swoosh or something like that. What was it that made Nike such a household name? It wasn't in the 70s or the 80s, to be honest, and Adidas really had that tied up. But 90s, noughties, etc. Nike was it.
Yeah, and what they did really well is and I think again this is a reason why they've struggled recently, is they really tapped into the sports market very well. So they made some really great movements, and if you've read Phil Knight's book, Shoe Dog, he talks in there about building relationships with athletes. So it talks about sort of trying to steal market share off of Adidas by going to, the top runners, by going to, the top sports people. So if we think back over history, right, LeBron James, Michael Jordan,
Did we mention Lance Armstrong or not?
Maybe not. But, Rafa Nadal, Roger Federer, right? So we could go on, but they have some of the best names in the industry. And that has basically led to this sort of brand becoming, a household name, because it's, these were posters, right, on your wall when they were, head to toe in Nike. So I think that was really good. And what they've done recently is with that sort of direct to consumer strategy, they moved from sort of a sportswear focus to more of a gender focus. So it was sort of items that weren't necessarily sportswear, and they're now looking to shift back to that. And I think that's a really great strategy to dial back in on some of those sports that we all know and love, because at the moment they are sort of losing ground to some of those competitors. But yeah, it really built its sort of brand name of being, quality products and basically all of the top stars wearing their goods. So
am I allowed to ask who the person involved in this, who was the CEO or the CMO that pushed them down this path? And is that person still there?
That's a good question. I'm not actually sure on that. But look, Elliot Hill, I think at the time it was the CEO.
Yeah.
I think his name was Jason Donahue, I think. He's been replaced. So Elliot Hill is sort of coming back to the fold. He'd previously been with Nike in, lots of different roles over many, many years, started as an intern, 20, 30 years ago. He is now sort of coming back in to take the realm as CEO. And he's essentially looking to sort of move Nike back to the roots, go back to sort of the sportswear function, try and reconnect with that younger audience, move through sort of innovation a little bit more. They've lacked a bit of innovation compared to some of those other brands, especially from a running perspective in sort of recent years. At a time when running has really gained a lot of traction around the world, think about sort of the growth of run clubs globally. It's become a bit of a trend now. A lot of people looking after their health and fitness is more than ever. So really looking to reconnect with that younger audience, innovate once again, and go back to sort of its roots that we sort of all knew and loved for a long time, sportswears, and also sort of going back to some of those, really good brands, because in the last sort of year or so, Adidas has done really, really well. Sales have grown.
So why have Adidas done so well?
So some of their traditional shoes, so the sort of the Gazelles and the Sambas, they've really resonated well with the younger audience.
But they're not sports shoes as such.
Correct.
They're
Yes.
like leisure wear.
Exactly. So they've done very well in that sense. Again, they're still nowhere near I think Adidas is still half of what Nike's market share is in the footwear market. So
Nike's about 40%. You've got me saying Nike, not Nike.
Yeah, I know.
Josh,
Yeah,
but
I'm
anyway,
changing
let's
it
go
around.
Nike. Is it 40% or something like that?
I think global sportswear it is. I think footwear's a little bit less now.
Right.
But I think, Adidas is still that closest competitor. But I think from a leisure wear brand, I think we see it a little bit more. And I think you mentioned this earlier, but from a running perspective, people are seeing it less. They're turning towards Hoka, they're turning towards On Running, these up and coming brands that have maybe innovated a little bit more on the running scene than what they have done at Nike.
We'll take a quick break, Josh, and be back in a minute. I'm speaking to Josh Gilbert from eToro. So you mentioned some of the new brands, Hoka, On Running. New Balance seems to be having a spurt again. ASICS to some extent. How tough is that marketplace? And it's a global marketplace too.
Yeah, absolutely. It is. And the competition is rife right now. But I think some of those older brands have reinvented themselves. You mentioned ASICS, New Balance. These were once sort of seen as, older brands. New Balance was dubbed sort of the dad shoe for many, many years. And it's sort of really coming back to the fold again. And, sort of younger demographics are wearing them. And I think that's a shout out to the teams there, the innovation, focusing on that younger demographic, trying to maybe gain a bit of market ground where Nike had lost a bit of traction. Maybe they'd taken their eye off the ball a little bit. So they've got a lot of work to do in that sense. And as I say, margins are coming under a lot of pressure at Nike. And, in terms of trying to go back to that innovation, that means it's going to cost them a little bit more money. They're going to have to sort of, go back and invest in the right areas. And that will put margins under pressure moving forward.
Okay. So is it investable? Its share price is off 60%, did you say?
Yeah.
It's trying to reinvent itself. It's got a new CEO, albeit a veteran, who has taken the strategy back to a little bit more where it was before in terms of chasing sports stars. Is it something that investors should look at least?
I think it's definitely one for the watch list. Yeah, look, very few companies and brands have this sort of dominance and global footprint that Nike has. And I think that's really important. This is a brand that has been around for many, many years. I still think the quality is there in its products. Again, the price point is sort of that mid-range. It's not at that top end like a Lululemon would be in the activewear market. So I think it's certainly a good brand. Look, this is, pardon the pun here, but this is going to be a bit of a marathon. It's not going to be a sprint, right, for Nike, longer term, because this is going to be something that's going to take, time for Elliott Hill to sort of really bring it back to its roots, go back to trying to target that younger demographic, find out what they want, bring that innovation back through running, and try and bring the sports back into it, and not just sort of be that leisure brand that it's focused on, and not done so well in sort of recent months. But look, with the thought of tariffs coming through as well, that's a bit of a worry. Think about China as a big market for them, and Mexico, in America, and sort of North and South America, both big markets for Nike. So I think bottom line, it's going to be a bit of a challenge still, but I think there is an opportunity for investors here with this company that is down 60% off its highs. In my view, it's a brand that still dominates the sportswear market, and would be something I would be keeping an eye on.
You mentioned China a couple of times. How important is China to Nike?
It is. Yeah. We've tripped back and forth.
We have.
Look, no, it is a big market for them. Obviously, anyone that sort of followed the China story will know that retail sales have really struggled there. The whole economy has sort of come under a fair bit of pressure in the last year or so, last couple of years really, ever since sort of the coming out of COVID. It is a big market. It is a big sort of a region where they generate a fair bit of revenue. And when sales sort of continue to decline, it is going to come under a bit of pressure. For us, we're sort of looking towards a potential stimulus package coming through. That's something that we believe they're going to need to deliver, especially with the rollout of tariffs coming, probably very, very soon. So from our perspective, that is something that will help stimulate, retail sales, will help the consumer, will help consumption, and that should drive sales back in the region.
Josh, what's your favorite running shoe? You look very fit.
Well, actually, I do have two pair of Nikes.
Do you?
Actually, yeah. I went to the gym this morning. I had a pair of Nikes on. So, yeah.
I've become an on running person.
Yeah,
I went Hoka for a little while, but I think on running Maybe I should be trying Nikes, perhaps.
Yeah, I reckon if you went to a run club, though, around Sydney, and there's a few of them, I reckon it would be similar. I reckon you'd see most people in Hokers and on runnings, etc. So, yeah.
I think so. Josh, thank you for talking to Fear and Greed.
Pleasure. Thanks, Sean.
That was Josh Gilbert, market analyst at social investment network eToro. This is the Fear and Greed business interview. Remember, this is general information only and should always seek professional advice before investing. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.